So what exactly is an appraisal? Bank appraisals have been a normal part of the real estate process for many years. They are also one of the most important parts of processing for your lender. In this video, we are going to discuss what is an appraisal, what to do if your appraisal does come at the lower value than what you have offered for the property, and how to protect yourself. That is coming up right now, so stay tuned. Hello, this is Sonia, your local realtor with Remax Realty Specialist. Welcome to my channel where we love talking about real estate and all things in and about Greater Toronto area, and we would love to take you along the ride. So hit that subscribe button and a little bell icon so you get notified every time there is a new video uploaded. So let's face it, you may have offered a $950,000 for the home of your dreams, but if that home is really worth only $900,000, the bank has a lot to lose if you default on your mortgage payments. Banks want to make sure that the money they lend you is protected, and appraisals are one of the ways to find out that. So how does an appraisal work? The appraisals happen after an offer to purchase has been accepted, but before the mortgage is advanced and the buyer takes possession. Pre-pandemic, appraisers had to visit the property in person in order to determine its value. During COVID, however, appraisers can view a property either virtually or in person. Appraisers are mandated to use very recent comparables, usually properties that have been sold in the last 60 days. Appraisers do not judge a home's value based on what happened before that or what can happen in the future, as they do not make predictions. So who pays for the appraisal? This really depends on a few factors, most notably if the appraisal was done by a bank, a prime lender, or an alternative prime lender. Banks usually pay for the appraisal or bill the cost in its mortgage, however, it varies from lender to lender. The goal of a bank appraisal is to justify how much a buyer has agreed to pay for a home, not determine the true value of a home. Appraisals will never come in over the agreed to price. If you get a deal, don't expect the bank appraisal to come in higher what you have offered. So what happens if a bank appraisal comes in at less than what you have offered? Unfortunately, sometimes the bank appraisers doesn't think a home is worth what a buyer and seller agreed it was worth. We see this sometimes during highly competitive markets where bidding wars are the norm, or even when the market shifts downwards rapidly and a lot of sales are still pending and have not been appraised. As we saw it in 2017, then again in late 2021. I'm just going to give you an example here. A buyer offers $950,000 for a home during a bidding war, and the house is only worth $900,000. This means the bank will now only approve a mortgage based on a value of $900,000, not $950,000 that you have paid. So when appraisal value does not equal how much a buyer paid for a property, so now you are in a bind. You have few options here. The first is you can find another lender that sends in another appraisal and hope that the second appraisal value comes in at what you have offered. Your agent can argue the comparable sales that the appraiser used to determine the value. You keep in mind, this is rarely successful though. This can mean extra cost and fee and is a very hard road to navigate because most lenders won't budge on the value. It's worth a shot though. The second option you have is you can wait. In a rising market, you can wait for a new sales to close that will help you justify the price that you have paid and have the property reappraised before closing. This will only work if you have a relatively long closing period. Or you can come up with the extra dollars for the difference. You may need to borrow the funds from your family or friends, or you may need to sell some assets to make up the difference. And the biggest question is, how can you protect yourself from low bank appraisals? There are few things that you can do to protect yourself from a low bank appraisals. Make sure your realtor takes an active role in educating the appraiser and directing him or her to recent comparable sales. They may be able to help persuade the appraiser's opinion. Have a financing condition and insist that your lender performs the appraisal during the conditional period. It's never fun to find out the week before you take the possession that the bank's appraiser does not think your home is worth what you have offered and that you need to come up with more money. Better to know your options when you still have time to make alternative arrangements. Don't overpay for the home in the first place. The bank is going to be looking at the same comparable sales as you and your realtor have, and make sure you truly understand how the home compares to recent sales in the immediate neighborhood. Have a contingency fund. There are hundreds of reasons why should you have available cash or credit when buying a home. Trust me, there are always unexpected costs. And remember to never borrow as much as a lender is willing to give you unless you want to be a slave to your mortgage. Have a plan B. Talk to your realtor, your mortgage broker, and bank before you put in an offer and have a backup plan if the property does not appraise. In a fast rising market, buyers pay more for a home than the last comparable sales. That's what makes it a rising market. Sometimes it takes time for banks and appraisers to realize what's happening in the market. So your realtor is the best person to persuade or talk to your bank or appraiser. If you're thinking of buying real estate in Greater Toronto area or surrounding areas, I'm just an email or a call away. Thanks for watching and don't forget to join me next week. Until then, stay happy and stay safe.